November for a look at the figures as they come through in about 30 seconds time. Pete, so just take us through what we're expecting.
Well, Joe, the unemployment rate has been hovering at around about 5.4% throughout the year, and it actually edged a little bit lower, just below 5.4, but you might as well say 5.4 today, expecting it to edge higher to 5.5. That's in line with forecasts that have also come out of the budget as well.
And what about the dollar?
Yeah, the dollar is...
what effect could this have on the dollar?
Well, we're going to be seeing in about 10 seconds' time. The dollar at the moment is about 104.43 US cents. Any unexpected blowout in that jobless figure might put another rates cut on the card, so let's see what the result is.
OK, so while Pete looks at that, just repeating, it was 5.4 last month, expecting 5.5. What is happening, Peter?
Well, Joe, as we so often do, there's a bit of a surprise here today, and the jobless rate has actually come in at 5.2%. So
wow.
The jobless rate has actually fallen. Economists were expecting no or very little jobs growth last month, but it's actually come in at 13,900 new jobs, 4,000, although it appears more of those are part-time or casual. The actual number of full-time jobs has fallen by 4,200. The participation rate remains the same, so more jobs created than expected. The unemployment rate down in a bit of a surprise to 5.2%, a bit of a good surprise.
How does this sit with the all the recent figures, like retail not going anywhere? Like, where are these new jobs coming from?
They appear to be we appear to be moving back into the phase where fewer full-time jobs are being taken on board because of the uncertain times. We're back to the situation where we might have been around about this time last year, where more casuals and part-timers were being taken on board. Employers a bit more cautious about taking full-time on, but undoubtedly, as you've indicated, that flies in the face somewhat of some of the slower figures we've had. Just 3.1% on the year. Economic growth yesterday. Other indicators, retail flatlining, building approvals down. Considering
the fact that this is a bit of a surprise result, has there been any notable effect on the dollar?
Yes, Joe. The Australian dollar, as we said just a few seconds before this announcement, was around about 104.4. It's shot up over that period to 104.76, pretty close to 104.8 US cents.
Glenn Stevens will be furious.
I don't know whether Glenn Stevens will be furious, but perhaps economists are thinking it's getting a lot harder to predict what's happening with the economy at the moment. But keep in mind, on Tuesday, when the Reserve Bank cut interest rates to that record low of 3%, normally you expect the dollar to fall. In fact, it rose at the time, and perhaps this increase in the dollar today reflects that as well, that money markets are perhaps betting that the rate cut that we saw on Tuesday might well be the last. Oh. And I noted that yesterday the likelihood of a rate cut to 2.75% on Tuesday just yesterday was about 70%. Before we went on air, it had fallen back to 60%. So things are moving pretty rapidly. It's not a sure thing that we'll be seeing more rate cuts as early as February next year.
I say Glenn Stevens might be furious because it isn't the focus, or part of the focus of the Reserve cutting rates to get the dollar down. They've been it's been so stubbornly high.
Yeah, exactly. And the Reserve Bank, in its statement on Tuesday, showed how frustrated it was, and actually mentioned the fact that the dollar was stubbornly high. Yesterday we heard, or last night we heard from the Deputy Governor of the Reserve Bank, Philip Lowe, expressing some concern that the dollar remained high despite 175 basis points of rate cuts since November last year. And he was asked a question about whether or not the Reserve Bank might do more than use monetary policy to push that dollar lower, and he didn't rule out any such action, but said it was perhaps too early to make that sort of call. But clearly the Reserve Bank is concerned that whatever it does, that dollar is staying around about 105 US cents.
So how will that play on the Reserve's mind when it comes to the next possible rate cut? You say with the lower unemployment rate, that mitigates against a rate cut, but with the higher dollar, that the Reserve would be trying to push that down once again with another cut. But if the cuts haven't been working previously, maybe they might give up on that.
Well, the interest rate cuts do take some time to work, and there was not a rate cut in November on Melbourne Cup Day because the Reserve Bank was still waiting to see whether those previous cuts were making any difference at all to the economy. So there is some time for those to work through. Keep in mind that there's not a meeting of the Reserve Bank in January, so we have to wait until February.
Yep.
And in between, we still have the budget problems in the United States, the so-called fiscal cliff. We're less than a month out. There's still no resolution. If that is not resolved properly, that could actually have a bit of an impact on the global economy, and by cutting interest rates the other day, the Reserve Bank has bought some insurance against any fallout from that, and that would be quite a significant issue if the US was pushed towards the brink of another recession.
Okay, so some economists saying rates could get as low as 2.5. The official cash rate will get as low as 2.5 or less than that. So what's your expectation in relation to that now?
Well, I think that the Reserve Bank is in an excellent position because you remember at the end of 2009 they took rates higher after they declared the emergency over, back up to 4.75%, have had the capacity to cut interest rates, unlike other central banks around the world like the Federal Reserve in the US and the Bank of England and the European Central Bank. So the Reserve Bank of Australia has plenty of ammunition in the saddlebag should it need to step in and cut rates if there are significant global factors to deal with in the new year or the slowing of the Australian economy exacerbates.
And there are kind of mixed implications for rates from this result today.
I think it's mixed. I think the Reserve Bank in the statement on Tuesday made the point that they were looking out for softening unemployment and a jobless rate edging higher. They would be delighted, as I'm sure the Treasurer Wayne Swan will be delighted with the jobless rate.
We can expect that media release shortly announcing his press conference within the hour.
As Wayne Swan makes his way to the podium at some point in the next few minutes, I think that he would be quite delighted. And of course, the government's pursuit of a budget surplus is quite significant, and a slowing economy, or an economy slowing too quickly because of the fiscal tightening, may well have been putting that surplus under a bit of pressure. So we'll have to listen to what the Treasurer has to say.
And you can watch that live on ABC News 24. Peter Ryan, thanks so much for that.